Well, happy Monday, everyone. Welcome to our Monday Market Matters, or shall I call it the today's Monday Market Madness? Because if you've been keeping up with anything in the real estate world, whether you're seeing it on the TV, you're seeing it on your social media, or you're seeing it in the newspaper, if you still have one of those, then yes, you've probably seen that it has been a bit of a madness world here in real estate in Texas or in Dallas, Fort Worth, or across the universe for that matters. And so, what are we going to continue to see now that we're going into these summer months? Is it going to stay the same? When will we start to see things balance out? Is there some light or some sunshine for some people at the end of the day? Because here in Texas, we've had nothing but crazy storms and rain. So let's take a look and see what's going on. Now, I have to first start off with this one quote that I thought was extremely relative to what we are seeing in real estate. Let me share my screen with you here so you can see that. So this comes from Sam, who is the vice president or the chief economist over at Freddie Mac. And he says the main driver of the housing shortfall has been the long-term decline in the construction of single-family homes. That decline has resulted in the decrease in the supply of entry-level and single-family homes, or what we would call those starter homes. So, if we take a look at what's happened decade over decade since basically the 1970s, what we're going to see here is I'm just going to show you a quick little graph on what has happened really over the last, these decades that we've been seeing. And so you can see here, we've got from the 1970s to the 80s, we had about 11 million new units of homes coming up. And even in 2010, we reached our height at 12.6 million. And look at where we've been consistently at the last 10 years. About half of that, as we still have more people needing homes, the new construction just can't keep up. Yes, we still have the pre-owned homes. Absolutely, we do. But we're just not keeping up with the supply that we need to keep up with the demand for housing here in the US. So let's take a look also here. I want to share with you another thing about the listings. What's happening with the listings? Are we going to have more come on board? Are we going to continue to see this crazy shortfall in the amount of listings that we are seeing currently today? So if we look at year over year today, we've got from 2020 last year, this curve right here towards the bottom, you are seeing a huge decline in the number of active listings. So, or in just the listings that we have. Now, this can be pre-owned, new construction, whatever it is, but we have about half the amount of listings hitting the market today than what we did last year. Now, as you can see here, about April, we started to see that shift, and we're seeing some new rise of inventory. Now, I will say that it's getting quickly absorbed because the demand is still huge and humongous, and we're still like 1 point something month supply of inventory. So we still have very, very little inventory that is quickly getting absorbed. So you might say, well, will we continue to see this incline of inventory? What can we expect to see? And why are we seeing more and more people being willing to put their house back on the market now? So let's take a look at this. If we look at the inventory levels, again, before we get into that next graph, I want to share with you this. If we look at the inventories, you can see that we have since December, January, February, March, consistently been pretty significantly lower on the inventory levels than what we had at this point last year. Real quick, also, I want to share with you here another little quote that came about, that the demand remains strong. Let me go over this again. Demand remains strong as home buyers are snatching the listings quickly. Remember, I said they're just quickly being absorbed. Let's talk about the days on market. The days on market for a home to go from listing to contract, as you can see from the National Association of Realtors, has gone from 29 days a year ago to 18 days today. Now, I know if you guys are in my market area, you're going, Kelly, I see it go on the market, and then in a few hours, we see it come off the market. Well, that is definitely the case. In a lot of situations, it does take a little bit of time to negotiate contracts or to do something like that. But in the most part, if we look universally around, we're going to see somewhere around the 18 days on market, which is still a quick sale. It doesn't have time to get out there for half of the world to even see the listing, right? It's gone. Now, I want to show you, when will the housing inventory grow again? And so if we look at where the different economists are saying, when will the housing market pick up? We're seeing that most of people are saying that the second half of this year. So the second half, be it from, July through December, we're going to start seeing more inventory hit the market. Yes, that is my doorbell, by the way. Now, why? Why are we going to see all of a sudden a new rise of inventory? So I want to share this one here with you here. There's several different reasons why we're going to see more inventory hit the market. And here's the top 5. Number 1, the house no longer meets the person's needs. So, they're needing something for more outdoor space. They're needing this, needing that, whatever the case is. The current home does not any longer meet their needs. A lot of people right now, and even some of my sellers, hit number 2. They're cashing out, make a profit on the current market right now. It is a great time to sell when people are putting offers in 30, 40, 50, 60,000, and even heard of 100,000 over the asking price. It is a great time to cash out on your current market value. Some people are saying, hey, we need a smaller house, less work to maintain. Some people are saying we want to now move that we can work wherever we want because of remote working. We can go and work closer to our family or our friends and move outside of where we're at. And then the other ones, we want different amenities and features. So those are the top 5 reasons that we're still seeing people today wanting to go ahead and make that move, and why we're going to start seeing more homes start to hit the market come the second half of the year. So this next screen I want to share with you here is showing you the average profit of a home that sellers are starting to see. And if we look in Q1 of 2020, we saw that people were cashing out on a profit of about $50,000. We have seen a huge jump of about 26% just this last Q1 of 2021. So we went from 55 to 70,000. Guys, it is June now, and I can guarantee you, once we close out this second quarter, we're going to see that even higher than where we are, which is why we're seeing a lot of people make that decision. I'm going to go ahead and cash out of my home right this second, right now, before, things change, if things change, which is going to be another topic that we could probably discuss at a later time. Okay, what about mortgage rates? I want to go back to this screen here and let's talk a little bit about mortgage rates. As you know, they're sitting, in the they're still at an all-time low. But mortgage forbearance. Total different thing. We'll get to mortgage rates here in a second, but mortgage forbearances, what's been happening for those forbearance? I have heard, and I sat down and talked with somebody for an hour the other day of how they felt like those that are in forbearance, we're going to see a big target of them hit the market as foreclosures, and it's going to drastically change the market. So if we look at those that are currently in forbearance over the last 2 months, it's been pretty stable. Okay. So we're only seeing about, for those 3 weeks in March or in April, as you can see, is very consistent, 2.31 million. And if we go in and take a look at, okay, well, I go back to this pie shape thing that I'm going to show you here to kind of really represent to you what's happening individually with those that are in forbearance. And as you can see here, we've got about 47.3% of all of the ones that went into forbearance have been paid in full. They're done. They're out of forbearance. 36.5 of them are still working on that repayment plan. 16.2 are still in trouble. And out of that 16.2, can you see it right here? The 1.6% are repayment plans. They could go into short sales, deed and lieu, foreclosures. Those are the ones that we have to keep our eyes on and take a look at. And this data is as recent as April 18. So fairly recent information. Here's the deal, guys. And this is going to be, like I said, something that we really want to keep our eyes out on. But if 16.2 are in trouble, even if that 16.2 hit the market, okay, of all the ones that were in forbearance, will they be quickly absorbed in the market when we only have 1.2 or something supply of inventory, a huge shortage of inventory? I have a feeling that they very well be quickly absorbed into the market and not really have an impact on the market prices that we're seeing today. Okay, so this here, let's see, I think we've kind of just looking at some more graphs that I might want to go over, and I think we've already kind of hit that one. Do you want to get into, though, a little bit about the mortgage rates? So where are we sitting at mortgage rates, and why is this still, even in the crazy market that we're in right now, being this huge, seller's market? Why are people buying? Why is it still a good time to buy? And that's one of the things is mortgage rates, guys. Mortgage rates are still at historical lows. And I really want to hit, actually, I want to go to a different slide here, because where are we going to see mortgage rates going towards in the future? And so to show you this, I want to get to that screen right here, and let's take a look at it. Of course, different persons think different things, but as you can see, pretty much across the board, we're going to be seeing somewhat of an incline of mortgage rates, not significant, but still an incline. So right now, it's still a really great time to buy, even in years 2022, as we're sitting at 3.67, guys. They have been like this. I bought a house 3 years ago, or no, I refinanced a property last year in 2020, and the mortgage rate on that one was like 3.4, 3.5. So as you can still see here, even when we get into 2022, 3.67 is still really a great interest rate. So really a great time to buy. It gives you more purchasing power, because as you know, as the prices are increasing, that means the less the house that you can buy. But when mortgage rates stay relatively low, still makes that such a great, sweet deal to take a look at. All right, so in the coming months, I want to make sure I'm not sharing my screen anymore. Hopefully we are not sharing, because I don't know what you're going to find on my screens there. A lot of crazy stuff, that's for sure. So anyway, I want to invite you guys to a very special webinar that we're going to do. Here, I'm going to post the information. One of the big things that we're seeing a big hoop and hostel about on the media, on social, with our clients, all of our clients that are doing new construction is, oh my gosh, it is getting so expensive to build a home. And I'm scared that they're going to, when we get to closing, go up $100,000, because that's what some builders have done. Or can they really back out of my contract and then I have no home to live in? I've already sold my house. I want to bring you guys onto a special webinar. We're going to talk about that in this webinar. We're trying to get some attorneys on and some different builders on with that to help us understand what's going on in new construction and what can we expect to see happen in the long run. Hope you guys have found something relatively of importance here that can help you understand how best to manage your real estate portfolio, or how to create your own real estate portfolio. Until next time, this is Callie Ritchie, the broker and owner over at Ritchie Realty. Have a great day.